the CNBC-TV18 special presentation. I'm Shireen Bhan and we're here at the Trident Nariman Point in Mumbai for the India Business Leader Awards. Select panel here, the jury for the IBLA Awards 2016. We've just come to the verdict for IBLA 2016, but you'll have to wait a little bit longer to get a sense of where that verdict will take us. But today we're going to take stock of the year that was and what 2017 holds for corporate India. Joining us, as I pointed out, a star cast: Rajiv Memani, EY, Aditya Puri, Chairman of the IBLA jury, Vishal Sikka, Arundhati Bhattacharya, Cyril Shroff, Shikha Sharma, Harsh Mariwala and Sanjay Nair. Thank you very, very much for joining us. Mr. Puri, since you're the chair of the IBLA jury, I'm going to give you the first say, sir. 2016 perhaps hasn't turned out as per expectation. November 8th has certainly been the biggest disruption that this country has seen. How would you sum up the year that's gone by? Private sector investment hasn't really picked up. Growth continues to be patchy. Has the year gone as per your expectations till the 8th of November?
Well, it was going as per our expectations. And obviously, we can't look at things in isolation. So maybe if you say growth hasn't picked up, that you have to see in the context of what's happening to the rest of the world. If you see November 8th, then demonetization with the purpose that it's set for itself is, I think, a good idea. I don't want to go into all the difficulties and the problems people had, which they definitely had. I'd rather put that behind us and say, if we look forward, I think we will reap benefits.
What kind of benefits do you expect us to reap? Because there's a lot of questioning of the enduring economic benefits that this move will actually have.
If they're able to execute the way it was envisaged, then three things will happen. Obviously, a lot more money will come into the system, which we are all seeing, which is the savings, and at least some of the non-rigid black money would come in. That increases the money supply that is available for productive usage. That's one. Two, it reduces the cash percentage in the country, which normally, the more cash you have, the more ability you have to go away from the trodden path. Three, we must understand cash is a very costly commodity. MasterCard estimated that the cost of cash in a country is almost 1% of GDP if you have 90% of a cash economy. And last but not the least, it brings a lot of efficiency if we are able to digitize. So within the parameters that digitization is successful, we're able to bring maybe about 70, 75, 80, I don't know what percentage of cash back into the system. Then this temporary disruption should be taken care of, not to its complete extent, but in the short run, there will be a drop in GDP. How much, I don't want to venture to suggest because I don't have the numbers. There will be, but I think it will come out all right.
Okay, since you said that we should talk about the road ahead now, and you've pointed out some of the challenges that we're going to have to deal with in the near term. We're at the end of calendar year 2016. At the start of 2017, the global picture perhaps looks even more uncertain, and what it means for emerging markets, perhaps the uncertainty is even larger because you're actually seeing the developed market story pick up, and the developed markets now chart out a course of revival. In that context, then, what do you believe 2017 holds for India?
I saw your interview with Ruchir Sharma. So first thing, that the narrative of the Federal Reserve doesn't match with the performance of the economy. So when they're talking about a lot more rate cuts, and when you match that...
Rate hikes, you mean?
Rate hikes. And then when you match that with the GDP growth and the rate of unemployment, as well as inflation, those two don't come together. So yes, they are doing well, best among the West. Europe is picking up to some extent. And we always hear this when it comes about. But if we are fundamentally able to achieve a growth rate that is among the fastest globally, then I don't think we have as much of a problem as being made out. But we must be clear, those supercilious rates that we talk about, those will probably not come about. You're not going to have the 9%, etc. But if you achieve 7.5, 8, I think you will still be a good destination.
Okay, Vishal, one of the other challenges in just taking that point forward is that the world is now turning more protectionist. Deglobalization is a real thing. It impacts your industry perhaps much more than it impacts anybody else here in the room. So what should the Indian response then be? I know that you've been trying to do that at Infosys, but what should the larger Indian response be if we see import barriers, even non-tariff barriers being imposed by the developed markets?
I see only one way forward, and that is innovation. Innovation, entrepreneurship, leveraging our collective talents, our intellectual capital towards becoming more innovative, more confident, more entrepreneurial. I see no other way. The year has been, Coldplay said, closing walls and ticking clocks, so it has sort of been like that.
Vishal Sikka listens to Coldplay. I'm glad to hear that.
All over you see signs of protectionism, of walls closing down, and that is obviously not a good thing, but it does point out the need for us to have an identity of our own, have a strength of our own. This has also been a year where AI has showed up to the forefront as a great enabling technology and also a great threat, a disruption of our times. And the only response that I see to the kind of work that we have done, certainly in the IT services world, where we have taken the more mundane, more mechanical, more mechanizable work and done that from here at lower costs, that's going to go away, make its way to automation. And therefore, the only way forward for us is to become more innovative, more entrepreneurial, and become more confident of our ability to innovate.
But, if I would ask you specifically, what would that mean? And if I would ask you to help us redraw the landscape, so to speak, for Indian IT, or for any of the sectors that are, to a large extent, exposed to the outsourcing services model, what would it entail?
It would mean becoming more strategically relevant to our customers, to the businesses of the world, becoming more imaginative, being able to, we do a lot of, if you look collectively at the IT services industry, we solve thousands of great problems for our clients, for our businesses, but we don't look inside that to see why, to see how are we doing it. If we become more explicit about it, more participate in the strategic journeys that the businesses are going through, don't forget that in the last 10 years, something like 34% of the Fortune 500 have gone away. They're not there anymore. 10 years ago, the Fortune 500 that was there, only 85% of them remain, something like that. So that to me is a colossal failure of the consulting industry, of the sort of the advisory industry in the sense of strategy and so forth. I'm sure they all had innovation departments, they all had huge budgets. So I think that's a great opportunity for India and for the Indian services industry to really become a partner in helping businesses become more innovative.
But are we there? Are we anywhere close to being there?
No, not yet, but we have the potential to. We have the potential to, because the world is being rewritten with software and all we know is software. So there must be a solution there.
Well, we hope that there is a solution there. But Ms. Bhattacharya, let me come to you now. And, if I were to ask you to sum up 2016, both in terms of what your expectations were, where perhaps we've done better, and where you would have liked to see more action, and also in terms of 2017, give us a sense of what we should now expect. This big hope is that we're going to see this big fall as far as interest rates are concerned, that some sort of dividend is going to flow to Jan Dhan accounts by way of what the government does decide to do. We don't know whether that is going to happen. The possibility of a farm loan waiver, the buzz is picking up practically every day. Are you feeling concerned about 2017 already?
Well, not really concerned. Rather, I would say that I have a lot of hopes of 2017. And I think it's based on the realities of 2016. What I would have liked to have happened better in 2016 is possibly the resolution of the large value NPAs. But though they didn't happen in 2016, I'm quite certain that it will happen in 2017.
Why do you feel that strongly about it?
We have been pursuing these matters now for quite a while. And we can sort of now sense that, times are upon us when these will necessarily have to be resolved. So, there is a time for everything. And you cannot go beyond that time for anything. And in respect of these assets, we can now almost sense the fact. It is based on also the reality that many of these projects are now almost completed. Already they have started production. They may have been classified, but they are actually operating. And therefore, it makes sense to actually resolve these and be on your way. So we feel that, at least the top 20-25 large value NPAs that we have, we'll 100% see them getting resolved in 2017 either way. Okay? So that will actually be a very major step for the banking industry. The second thing that I think, and here I will add up what Vishal said and what Aditya said, that is, the demonetization bit actually enables a lot of small entrepreneurs to become financially included. Now, most of these people, they were doing cash business. Now that they're forced to do business on the electronic or the digital channels, it'll be much easier for the official banking system to fund them. And believe me, in India, one of the reasons why we are adding 1 million people to the work stream and still you don't have social unrest is because there is huge amount of entrepreneurial talent in India.
Sure.
And if you go to any of the tier 3, tier 4 cities of this country, you will see small businesses everywhere. And these businesses, actually 94% of them are funded from the non-official channels, where the interest rates are much higher. So actually this demonetization gives us a perfect platform to push these people onto a formal system and ensure that, the financing that they have still not been able to access, that we are able to give them. For instance, I'll just give you one instance. We run these rural training centers called Root Cities, and we have about 117 of them. We have trained in the last 4 years about 2 lakh people there. Our placement rate is 49%. But amongst those that were placed, the few that we have set up in business, today they themselves are employing another 8 to 10 people.
Sure.
So, that is the kind of entrepreneurship that we've really got to give wings to in India. Because otherwise it is not possible for formal employment to really, scale to the extent that it's
You talked about some of the opportunities, so let me end by asking you about the key risks that you, believe we will have to contend with in 2017.
I think the risk is still that, the demand needs to come up. The demand is there. But because I think the business confidence is not that high.
Has it been hit further?
Yes, it has. It has. And that is where we need to give comfort that this is a temporary hit. If the business confidence manages to perk up demand, I think we'll have it all. Because other than these two, I think all other macroeconomic parameters are fully in place. So basically, I think these would be the main risks.
Okay. Cyril Shroff, let me put the same question to you, because, you're looking at what's happening on the M&A front, you're looking at what's happening on Deal Street. How much has business confidence taken a beating post the 8th of November? And what kind of risks and challenges do you foresee as we look into 2017? Also, what are the big opportunities that you see?
So let me look at 2016 first. A couple of points sort of stand out. I think the year has seen a plethora of legislation. So we've seen Parliament very active, whether it's things like the insolvency legislation, GST and others. So I think we're really getting back to parliamentary form of legislation on important issues.
Even if we didn't have a winter session, that we've managed to actually do a lot.
It's been a great year for legislation. Secondly, I think just from a governance point of view, and I'm not referring to any cases, I think the maturity of the debate in the country has exponentially increased in the last year. From essentially very technical type of conversations that used to take place a couple of years, governance, both as public governance as well as private governance, I think the conversation has moved to a very different level. It's work in progress, and I think we'll see much more happening in the next year. So even as a professional services firm, I think the kind of issues, the deeper issues that we see our clients asking, including things on family governance as well, the entire how families should be governed, given that 70% of corporate India is promoter control. So that we're seeing version 2.0 of governance in its broadest concept happening. That's one change that I see. At a sort of broader political economy level, I see some mixed signals. At some point, you feel that the government is moving left of center. I don't know where you would classify things like demonetization and others, but there's a drift to the left. At the same time, things like the insolvency legislation, that's as capitalistic as you can get. So there's a bit of confusion as to which direction we are headed. From the corporate India, as we see it, I think they're a little low just now. But if you ask them the question about how do you feel about the second half of next year, I think they're still quite confident. And I think they will get back into strong investment mode. So Deal Street should be good. This has been a good year for M&A activity.
Yeah.
But if you look deeper, almost all the big M&A has had a stressed assets problem on the sell side. So whilst the large transactions, they've been implemented in a private environment, they've been implemented without a coercive process of law, but they have been stressed. And I think we will, as Mrs. Bhattacharya said, I think you will see a lot more next year. Maybe not under the Bankruptcy Act, but possibly because of the threat of it as well. Foreign investors, including private equity, and Sanjay will have more depth on that. Still very optimistic on India. I think, in terms of, again, our deal portfolio as a professional services firm, we see private equity as one of the most active segments. They're putting money to work in India. So I feel I don't think 2016 was a bad year at all. We shouldn't judge the whole year by
what
the
happened
events.
on the 8th of November. Yeah.
Absolutely. I mean, if you take the whole year in the round, it's been a terrific year. And I think 2017 will be even better.
Better than 2016.
Yeah, but I think, again, the first quarter will be a bit debatable. I mean, it'll take some time, but I think if I were to if we're having the same conversation in December 2017, I think I'll be a happy guy.
Okay. Shikha, I want to pick up on the point that Mr. Stroff mentioned there about perhaps this fear that we are now going to move towards populism over fiscal prudence. Does that concern you? And again, as far as risks, opportunities and challenges are concerned, what does 2017 look like?
So I think the opportunity is what Arundhati and Aditya both referred to, that if we can kickstart consumption and if the government can focus on accelerating investment in infrastructure, then it can actually change the mood and change the mood pretty quickly.
But didn't it try to do that already with the previous budget? I mean, whether it's railway spending, roads and highways and so on and so forth, but that hasn't really impacted credit offtake. It hasn't really, in that sense, kicked off private sector investment.
It hasn't kicked off private sector investment, but you certainly have seen more activity in the construction space and construction equipment space coming from the focus on roads. And if we can kick that off for railways as well, then it certainly adds to economic activity. I think there's a general expectation that the budget should probably have some announcements for uplifting the mood from a consumption perspective. The promise of reducing tax rates, for instance. I think if part of that happened, it could change the mood. Or if there's some initiative around, you may call it populism, but I think it's important to get that done because unlike Cyril, I think we don't live in a black and white world. I don't understand left of center and right of center. I think you have to do things which are pragmatic and inclusive and take the country forward.
Which means what? Like things like a farm loan waiver? Do you believe that that is on the cards?
I think farm loan waiver creates the wrong habits and will actually encourage people defaulting on loans. I don't think that's a good idea. But for instance, encouraging low-cost housing and figuring out a way of accelerating low-cost housing, that could be great for the economy. It would meet the promise of housing for all, it would kickstart consumption, it would kickstart construction, and that's a very employment-intensive sector. So there is a bunch of things that all of us expect will come from the budget, and that can change the mood. The other interesting thing to me, actually, Shireen, in all of this is, post-demonetization, we all thought that, okay, we're going to, because of the cash shortage, we're going to see a hit in sales and that the recovery will happen only slowly. I was just asking Harsh, and I've been asking a couple of other people as well. It's interesting that the recovery is actually a little faster than what we would have anticipated. So it comes back to my core belief that Indians are the most adaptable race in the world. You throw something at them, they will crib for a while, but then they'll move on and say, okay, that's the real world, and let's move and see how we make the best of it. We have not seen such an accelerated increase of digital in the 3 years that we've been hugely focused on it.
Right.
I was mentioning yesterday, debit card active on POS.
Yeah.
The kind of shift we saw in 3 years, but we've seen in a month.
Necessity is the mother of invention, and you have to make that move.
But the point is that even when you want to bring change in an organization, sometimes you just hit the stick and say this is not going to happen from tomorrow, and then people adopt and change and move on. So however painful and hard it may be, you can see that big change to digital, and that would dramatically change business opportunities. I totally would endorse what Arundhati was saying, that if we look at, for instance, what happened to the consumer lending market in India, and we looked at data on this, right? In the urban markets, it used to be 40% formal lending, 60% informal lending. And with the emergence of the credit bureaus and availability of data, that just changed dramatically over the last decade. If digitization goes through, then today, to small entrepreneurs, the funding pattern is probably 20% formal, 80% informal. Imagine what that would do if that came into the formal sector. It would create opportunities for the financial services sector, but it will bring efficiency to those guys because their cost of funding is going to come down from 36% to maybe 10, 12, 13%, whatever happens. So I think there is some dramatic change that will come through, not necessarily because interest rates are coming down.
Yeah.
Who
But
knows?
on the issue of interest rates, and let me get the three bankers on this panel for a quick comment on that. And Shikha, let me start by asking you, because there's this big hope that we are going to see a dramatic cut in interest rates. Is that hope, or are we likely to see this follow through?
Shireen, I have stopped giving forecasts because we live in such an uncertain world. On November 8th, so many things came and hit you. Who said Brexit was going to happen? Who said we were going to get the US president that we got? Who imagined demonetization? I don't know what's up there tomorrow, so I'm not giving you any predictions on interest rates.
You're not giving us any predictions on interest rates, Mr. Puri?
The prediction of interest subject to other things being equal. So if inflation goes down, if as many deposits that have come to us, if only 50% are withdrawn, if the commodity cycle doesn't change the actual inflation bit, I think you will see some reduction in the first quarter.
Some reduction?
But when you start to say dramatic, it starts from you guys dramatic, then you create the expectation.
The government is saying that, sir. We aren't saying any of that.
I'm
the
giving
government
a wider
is saying
aspect.
that.
I'm talking about you guys, everybody other than the bankers.
Okay.
Because
so everybody else on one side and the bankers on another side,
it seems sometimes. It looks like that sometimes.
Shall the twain meet or not?
So the fact of the matter is, the way the MCLR, which is the marginal cost of funds, is structured, if our deposit rates go down, which is a function of money supply, I automatically reduce the interest rate. So I want to try once again with the media at least.
Okay.
This is a mathematical fact. So there is no question of what I do or what Arundhati does or what Shikha does. If the supply of money exceeds demand, we drop the deposit rates and my cost of funds goes down. The drop will be either dramatic or non-dramatic, but it will be mathematical.
All right, it'll be mathematical. Ms. Bhattacharya, would you like to add to that?
No, I think what he says is exactly the thing, the way it is. And today, huge liquidity, very little credit offtake. So obviously, if you put those two together, rates drop.
Okay. I will leave the interest rate debate for Lata to take forward. Mr. Mariwala, let me come to you, sir. Shikha just talked about how you believe that the recovery has been faster than what you anticipated initially. But give me a sense of what it will really...
No, it's been faster than what I anticipated.
Okay, well, faster than what you anticipated, maybe not what he anticipated. So what is the sense of consumption at this point in time? And if I were to ask you about a few levers that you believe whether the government can exercise, to really kick things off from a consumption point of view.
See, if you look at post-demonetization, I think your question is relating to that. November was a bad month for all of us. And again, within the country, there have been regional variations. South, almost normal. West, okay. North and East in a bad shape. Wholesale in a bad shape. Rural demand in a bad shape. But modern trade,
holding up.
Big city retailers holding up. So everybody was down in the month of November. December, I also expected a much slower recovery, but I just had a review meeting with my team and it looked like I think we're getting back to normalcy much sooner than, I don't have the numbers yet, but it's substantially better than November, which is a very good sign. What can the government do? I think ultimately it's a question of supplying money quickly into the system, and the pace at which it is happening is much slower than the demand. So I think that is one key, I would say, input which the government can do. I think beyond that, one other thing which I'm a little worried about is the GST part, because again, it's a big reform, and there will be some time when the GST is launched and the actual trade and the industry is able to adapt to GST.
So what is
and
now
the short-term disruption again should not impact business.
So what is the expectation now realistically? Because it seems like even if it does go through, the legislation goes through in the budget session, perhaps April 1 is unlikely.
It's almost out of question, yes.
So even if it were to be a July rollout,
July or 1st September, I think these are the two dates.
So what will then be the transitional pain impact?
One doesn't know. I think if there is more time, to that extent, there is much more time for the industry and trade to meet up with the challenges of GST. So at one level, I think it's a good thing that it is getting delayed, because on the back of demonetization, if this happened very soon, it would have had a double whammy, But if there is all the laws and everything is clear, and between that and the actual launch of the GST, there's a gap of 4 to 6 months, then I think that gives enough time for the trade industry to cope up with the challenges of the change.
Okay. Sanjay, when we were having this conversation last year, you were talking about how you hadn't really seen a pickup as far as private sector investment was concerned. That story really hasn't changed today. As you look into 2017, for private equity, 2016 has been a good year. Lots of exits as well, including for KKR. But, what do you see for 2017 as the opportunities and risks?
I think from the country's point of view, the government has got to lay out a clear path for growth. I think that is the real thing. Things like demonetization, everyone's camp, it's great for the long run, leaving aside the short-term inconvenience. But the long-term issues are, how do you get the right vectors for growth from here? Now, if it's purely consumption-led, we saw that in 2008, what happened. It leads to quick inflation, and then, rates go up, and it's not sustainable. So it's got to be investment-led. And if it's investment-led, the private sector has to invest, frankly, not just the government. How do you get that confidence and climate back? I think that's the thing that at least people like us are watching, because we only buy into private companies. And if the promoter, the entrepreneur, is not enthused about investing, then I think we're like the last suckers who are investing behind him, right? So there's no point investing behind a promoter if he's not enthused about it. So I think that's a big challenge for the government. I'm not saying it's their fault, but how do you get the confidence back so that the Indian businesses invest in India is the number one thing. I think
if I were to then ask you, because everyone's sort of talking about Budget 2017 as being this big stimulus budget, that's what we're calling it here on CNBC-TV18. What would you like to see from Budget 2017?
I think you're going to see structural changes on the tax side. Okay, I think you're
a big radical cut in corporate taxes.
Whatever, look,
is it possible? The roadmap was for 25%. We haven't moved the needle.
I think there's enough fiscal a gap out there that they can do a lot of things if they want to. So it's got to be very focused in getting the investment sentiment up, rather than a thing like giving a big largesse to the farmers or whatever. And my view is that they're going to do something for the capital markets desperately, because frankly, local savings.
What for the capital markets would you like to see?
Again, I'm not going to make a guess, but I would say stay at the conceptual level, that if local savings don't come into capital markets, you'll keep depending on FIIs and FDI. Now, FDI reforms, by the way, have been fantastic, right? But you can't keep depending on foreign savings to come into India to build India. You've got to build local savings, and you've got to have a framework of capital markets that enthuses them. Now, we've talked about this every year.
Yeah.
So I think there's no magic out there. You just got to implement a few things. And I think the government has still got a honeymoon for another few years, because, while oil and all might go up, I think the credibility is high.
Yeah.
The reforms, at least in the point of view of bureaucracy, the responsiveness has come a long way. The work ethics and work culture are outstanding. We can talk about that. So I think there's a lot that they could do and announce in this budget that gets the sentiment of our...
The one thing that you would really like to see in Budget 2017?
I think something which really promotes people to begin to start doing capex, and and of course consumption has to pick up. Without consumption, there's no point doing more capex. We're already underutilized capacity, and we don't have much pricing power. So there's not one thing. It's not going to be one thing. I think as Aditya said, you guys in the media make this one thing a big thing, but there's got to be a series of things that really come together and gives a framework for growth, because we're at a juncture we got to decide, are we going to consumption-led, are we investment-led, are we going to be driven by foreign savings or local savings?
Okay.
They've got to make up their mind.
Okay. Rajiv Memani, help the government make up its mind on what it should do in Budget 2017. What do you see as the key inflection points for the year ahead?
So I would think, as Harsh said, GST is a big inflection point. If we all believe that demonetization is a big change, my personal view is GST is 2x of that, because it's so rational and so I think we are seeing very large structural changes, which all of us believe give short-term pain but medium-term to long-term benefit. And I think most of people logically are convinced about that, but I think what government has to do behind these structural changes, that if they fundamentally believe that if they're collecting 8.5 lakh crores as taxes, and India's tax GDP ratio lingering between 10 to 11%, if this is going to go up because of demonetization, if this is going to go up because of GST, I think this year the government will have to back itself up and say, yes, the tax GDP ratio is going to go up. Yes, we are going to provide some incentives, and we will use the buoyancy effect to meet our fiscal deficit, which I think hitherto the government has been shy. So I would say that I think that to me is the fundamental thing. Given when the election timing is, I think it will be much more populist from a consumer standpoint. You're having the budget in the first week of February. You have some very important elections coming up. So I think we have to expect, which may not be bad, because if it gives for investment to come, consumption has to move up. So the government has to provide relief, and I think
So you think that the relief will also be more from a consumption prism?
It will be. It has to be, given what the political reality is.
So income tax breaks and so on and so forth.
I don't know whether it's income tax breaks. Could be lower, lifting the slab rates from 2.5 lakhs to 4 lakhs, 5 lakhs, reducing the low. I mean, I can't see the higher rates of taxes changing. Doing that, giving some corporate relief to bring 30% down to 28%, saying that directionally we are traveling there. So I think that's what has to happen. So I think GST plus a budget which gives, consumption stimulus so that the investment activity starts, and obviously, hopefully, interest rates and other things will promote that. And the third, in my view, they will have to back some sectors which create employment
so
and innovation.
Leather, textile,
so I think
IT, perhaps.
It now has to go deeper into sectors. And IT, I completely agree with Vishal. The world is changing at such a rapid pace, either because of technology changes or because of nationalism, that unless we don't promote digital and innovation, and what has happened in many ways will foster much greater and accelerate innovation. So I think those things we will have to look at and change. And I think finally, I would say, just from a tax standpoint, I think the number of measures and reliefs that the government has given from a transfer pricing standpoint, from APS standpoint, everything is pretty significant. So I think average person is still not feeling on the ground, but I think from a corporate level, I think the reliefs that the government has given is much better. But you have GAR coming, which can have disruption. You have BEPS coming, which can have impact. So you're seeing globalization impact because of supply chains integrating around the world. But at the same time, you're seeing government very focused on trying to see how they can get relief going.
Okay, so let me get the final comments from everyone. And Mr. Puri, let me start by asking you, since we're talking about the budget trying to stimulate growth, how much of the government's response also now needs to be with an eye on what's happening outside of India? Right now, we're talking about stimulating growth inside of India, but the challenges and the opportunities, the threat as well of deglobalization, protectionism, and so on and so forth. How much should the Indian response now also try and counter that, the big global reset, so to speak?
See, if you take a summary of what everybody is saying here, fundamentally, if we get things right, it's a bright future. So we're talking about, if you see what did demonetization do, you take Harsh's point. If you get money back into what was not a digitized area and what was into remote, you come back to the old growth rate. If you take what Rajiv is saying, fundamentally, whether it's jobs, etc., and I'm saying don't write out demonetization between taxes, which they will get because they didn't get the money being returned. It will be a situation where when they've returned the money, there are a lot of people who are going to be liable for taxes. And if they can bet on what is going to come through there, that's important. And semi-urban and rural India, if we can get light electricity, water and technology and out there, is a big uptick. You'll have to depend more on India itself and go forward because the export-led model is gone. But fortunately in India, there are enough avenues, if we get it right in terms of improving our efficiency, in terms of bringing about inequality, in terms of removing the difficulty of doing business, putting money in the right places, I think we're still okay.
Okay, I'm going to get each one of you now to give me one response, and I'll start with you, Vishal. 2017, cautious or confident?
Confident.
Confident. Ms. Bhattacharya?
Confident.
Confident. Cyril? Shikha?
Optimistic.
Okay, optimistic.
Cautiously optimistic.
Cautiously optimistic. As we go down the table, it's getting even more caveated. Sanjay?
Cautiously confident.
Cautiously confident. Rajiv Memani, you have the final say.
I think I feel quite optimistic. I think it should get better.
Okay, so the mood is cautiously optimistic. I hate saying that, but that exactly is the consensus here at the India Business Leader Awards jury. Ms. Bhattacharya, Shikha, gentlemen, thank you very much for joining us. It's been an absolute pleasure. Thank you very much for sharing your thoughts with us. And we'll see you again when we give out the awards for the India Business Leader Awards. From all of us here, goodbye. Many thanks for watching.